Hello and welcome to our online trading courses. Before we dive into the exciting world of trading, let's take a moment to understand the basics of the financial markets. Whether you are brand new to trading contracts for difference or you've tried it before and found it a bit tricky, these courses are here to guide you step by step. HFM exclusively offers CFDs. However, to fully grasp how CFDs operate, it's essential to have a comprehensive understanding of the market in general. Let's start off with understanding the financial markets. Simply put, they are where people, businesses, and large institutions come together to trade things like stocks, currencies, and bonds. Think of it as a giant global network where buying and selling happens every day. So we have different types of assets like the ones mentioned above, which investors can buy, sell, hold, or simply speculate the price direction. You are most probably thinking, are the financial markets safe? Well, the term safe can be interpreted in different ways. The financial markets, such as the stock market, the foreign exchange market, and even your broker, like HFM, are designed with systems in place to ensure security and protect your investments from theft or unauthorized access. However, while these markets and CFDs provide opportunities, they also come with the risk of loss, primarily because of market volatility. This is something we will cover throughout our courses. Let's see an example. Tesla stocks are valued at around $200. If you buy at the price and the stock declines to $180, your position will show a loss of $20. In essence, while the financial markets are secure environments, your investments are not immune to the natural ups and downs of market volatility. The financial markets attract a wide range of participants. These include individual investors who are everyday individuals trading stocks, bonds, and other assets aiming to grow their investment. This category includes both professional and inexperienced individuals. Then we have institutional investors. These are large entities such as banks, hedge funds, pension funds, and mutual funds. They normally are managing large amounts of money and normally on behalf of other clients. Companies represent businesses that issue stocks and bonds to raise capital or buy back shares to support their financial strategies. Governments issue bonds to finance public projects and manage fiscal policy, playing a key role in the broader economy. Finally, central banks hold a significant role. They manage the national currency and actively buy and sell assets to influence exchange rates and guide the monetary policy. Each of these groups trade for different reasons, whether they're aiming to grow their investment or institutions managing funds or keeping their operations running smoothly. Let's begin with selling. A straightforward way to understand this is when an individual chooses to sell their security in order to secure potential profits or to avoid further losses. By selling, they recover the current value of the investment, whether with a profit or a loss. But where does this money come from? Quite simply, the buyer of the asset provides the fund that the seller is going to receive. Now, buying is a bit more difficult to understand, as people may have different motivations for purchasing assets. For instance, some individuals buy because they anticipate that assets' value will increase. Others may purchase assets in order to diversify their wealth across various asset classes, reducing the risk of being overexposed. Additionally, buying can be driven for practical needs. For example, a large company like Apple might purchase a foreign currency in significant amounts to facilitate seamless transactions when paying for raw material from other countries. There are, of course, other reasons for purchasing assets, which we will explore in more detail at a later stage. Again, let's not forget that HFM offers only CFDs, but in order to understand CFDs, it's vital to understand all market participants and how they drive the price of the underlying asset. In the next video, we will explore the different types of assets that you can trade on our platform and what makes each asset special. Let's take the next step in your journey to learning about the financial markets. I'll see you there.